Hey gang, good afternoon. Welcome to the free market update. Going to be for tomorrow, Wednesday, Fed Day. Very, very important Fed Day tomorrow. As it stands right now, the Fed Funds Futures has an 81% probability as being likely for the first positive rate adjustment in 7 years. The issue, though, with that is the language in the statement following the announcement is obviously unknown, as is actually, to be honest with you, the rate, the rate adjustment. That's it's 81% probability, not 100, and so we'll see where that goes tomorrow. The language, though, following immediately thereafter should be quite the catalyst, or certainly could be. What I can tell you is in the options chains, the expected move as being priced in is approximately 45 points. We'll say 45 or 50 points. Came into 2050 today, and so that'd put it back around 2100, or could be back at 2000. Okay, it's just either or. I mean, it's plus or minus. But provided we get an uptick, an initial re-jerk reaction of a little break, and then maybe followed by an uptick. Provided, then the expected move would have us trade into approximately this 2100 area. Interestingly, too, as we come from essentially 2100 break down to 1980, it's about 120 points. And as you can certainly see and look, it took just in excess, not terribly much more than a week to do that, about a week and a half actually, and it takes literally less than 24 hours to bid back 60 from the low there, making a half back retrace on a week and a half's worth of break. 22 hours later, less than one full day, we were back on a half back, 60 higher off of yesterday morning's low. That's pretty strong. As we left off yesterday in last night's video, we were looking for a higher probability of an uptick, and certainly talked about this 2040 area as a possibility that happened to come, to fruition today. Nobody knows what tomorrow brings. Certainly on a binary event such as a news announcement, certainly especially with the magnitude of such an announcement as tomorrow, literally, quite possibly the first positive rate adjustment in 7 years. What I do know is the expected move that's priced in, and I do know that could very well, as per what's being priced in, bring us right back into the area from which it came. Doesn't mean that's going to happen. It could just as easily break. What I'm personally, my gut's kind of looking at is, I'm looking at the treasuries. They're a little confusing, but they started to come right today, i.e. sit down. The dollar was confusing, but it actually started to come right today, i.e. bid. And so with that, look for a little break tomorrow on the announcement. I say little, it could be, I don't know, 10, 15 points, and then, followed by a more significant bid than the initial break. Hope this helps. You guys, good trade, nice evening, and we'll do it again at the next update. Good night. Hey gang, good afternoon, and welcome to the premium market update tonight. This is going to be for tomorrow, wild and woolly, wacky Wednesday, Fed Day, and it really could be. We're looking at the possibility of this being the first positive rate adjustment in like 7 years, and Fed Fund Futures has it priced in at about 81% as probability right now. Note that's not 100, it may not, but the higher probability is that that's what we're looking for. So let's look and see what we've got. Just yesterday we were talking about how this dollar didn't make any sense. Why isn't it higher? If the rates are going to adjust higher, then why is the dollar not higher? And well, the dollar started to act right, just last night, today. Well, not really last night. Last night it actually broke first, and then just today it started to act right. But we got to be careful with this because, it's not like a lot of countries around the world really want to see, including us. I mean, a dollar that just, breaks away and trades for, much, much, much higher highs. That would put crude likely on its behind, and it's pretty low enough, or thought to be pretty low enough right now as is. You see the rig count every Friday is down consecutively, week after week after week. They're dropping rigs like flies. So I don't know. I mean, the probability is a positive rate adjustment, like I say, first one in 7 years, but then the magic could be, very well could be in the statement following it that could temper, very easily, very possibly temper a bid, an otherwise likely bid in the dollar. Okay, if the fact is, if it was such a foregone conclusion and that's just the way it was going to be, then the dollar would be higher, and it just looks like that it's not. And so that's a warning sign. We also pointed to last night the treasuries and the fact that the question was this: why are the treasuries higher? You break 4 points in one day, you bid back four, 2 days later. Is that it? No, that's not it. They continue, and they're up. Not only from there, but they're up from a 155 into a 157, two higher into a 157 handle. Why are they bid if the higher probability is positive rate adjustment? Doesn't make any sense. They would be lower. Well, the answer was basically it started to come in yesterday on that equal and opposite that we talked about, and with that, higher probability would be follow through downside. Well, that we got that. It's not like they really fell out of bed, though. They adjusted a little bit lower. And actually, to be honest with you, there were buyers there enough to buy the break. And they were there right essentially where the buyers were last time. At the end of the day, I'm going to tell you this. I mean, that's a neutral state. That's a neutral setup. Yesterday was bearish for follow through today, but we got that. The issue is, how did it trade through? And the answer is it traded through, but the buyers bought the break, and the buyers came from right where they came from before, and so that equals neutral. There's no real evidence or clue here. If anything, to be honest with you, I'm not. They look just like the dollar. I wonder, why aren't they lower? Why aren't the dollar higher? If it's so simple as just, okay, here it is, plain and simple, rate hike. It's not. It's just, this does not look that simple. This speaks to, okay, maybe we do get an adjustment, but then, like I say, they temper it with the statement thereafter, something along the lines of, okay, here's your first positive rate adjustment, but, the word but, we're going to keep an eye on things, and if we don't see the economy, showing signs the way we want, then we may reverse it, 3 months later, something like that. I don't know. We'll see where it goes, but in looking at these charts, it is confusing. Crude, same thing. Yesterday, buyers, I said they bought the break, gave you the level, likely follow through upside. Okay, they did that, but how did it trade through? That's the issue. How did it trade through? Traded through, reverse, sellers were present and sat it back down for a not so positive, upside follow through. If those buyers were, if this was real and this was an initiative buying and not some short covering in front of the Fed type thing, but initiative new buying, that would have closed higher. In my estimation, it would have closed higher because there would have been the follow through, the excitement, we believe in this, and the close would have been up around the ADMA around 37.5 and not down here at 36.5. I don't like the way that's set up. We got what we wanted to follow through, but the issue is, how did they follow through? And they did not follow through well. So, in looking at the beans, I do think that I can adjust this now. Not much, but I can adjust this a little bit now from 886 down to about 881. For if you're short, because remember we got, I don't know, I guess we got kind of lucky, to be honest. I mean, we otherwise we just flat absolutely nailed the high up there, and it sat down hard. And so if you are short on that, then I'm trying to give you a level from which you can trail your buy stop. And if you're not short, then you can use that buy stop as a way to try to get long. And I'm going to try to trail it into that wick right in the wicks, into those wicks. Right there, to where if we can get a close back up there, we can press those sellers, get them to yield their positions, which give us a probability of a follow through upside. So 881 is a new level on the beans, And I can't do anything with corn. I'm gonna have to leave it alone. It really should be like 376 or 7, 376 or 7 right there, which has already been traded. And so, um, you're either flat or long at that point on 377 corn. Because let's see, where do we want to go next? We'll let's go ahead and go take a look at the stocks here for just a minute. Um, so here's the deal. So we came from about 2100. We sat down starting the Wednesday before the uh, the Fed started on the Wednesday before, and the Fed or not Fed the jobs report. I'm sorry, the NFP, not the Fed, the jobs. And we sat down from there down to 1980, which is about 120 points. That took a week and a half. You can count the days. You can say it's about a week and a half. Um, in less than, and I do mean literally less than 24 hours, we bid back for 60 from the low there, which is half back off of minus 120 to a plus 60, which is half back. That's pretty strong. Last night's video, we were looking for the higher probability in the fact that they bought the break would yield higher probability for a maybe 30 or 40 trade up in here. The 40s came in today. So in looking at this, who knows what tomorrow brings? Like I said, it could be in the language. The higher probability is we do get a rate adjustment, but that it's not 100%. It's 81% right now priced in. And so, um, talking with Tony today, remembering back to some of his observations in the past when they first started in the tightening of the QE, and the fact the observation of Tony's was at that time, maybe they do tighten, but we're tightening from a lot of money to still yet a lot of money. And at the end, the cooler heads will likely prevail, and it won't be such a catastrophic event. So what did happen then? The market broke a little bit and then rallied big. I'm kind of thinking along the same lines here today. Now the expected move that's priced in is about 45 points. So, and that's something that you can go in your options chain and look and see the expected move that's priced in. So from 50, plus 45 or 50 puts us back up into the area vicinity of 2100 or back to 2000. Either way, either one's a possibility. Um, what and we'll see what happens tomorrow. But in thinking back along these lines in this conversation with Tony, the idea was, at the end, cooler heads will prevail. You'll figure out that, yeah, we'll, raise rates a little bit, but then, Yellen will figure out a way to temper, um, the, I don't know, the shock factor or whatever, I guess you want to call it, in the statement. So we break a little bit, I don't know, 10, 15 points, and then rally would be the way I could see it unfolding reasonably. Doesn't mean that's the way it's going to happen, but I could see, if we come in tomorrow, listen, here's the deal. If we come in tomorrow and the S&Ps are up here at, 2050, then that's a bullish tone, a bullish sentiment that gives a bullish, feeling. And then I would believe at that time we would, be more probable, higher probability, a little break, and then a bigger bid. So a small break, a big bid, like minus 10, 15, plus, 25, 30, something like that. However, if you come in the morning and we're down here at, I don't know, somewhere down here on this little wick there at, 2015 or so, something like that, well, you might want to think long and hard about the primary hypothesis and the higher probability at that point, be it, just uh, scratch, and maybe even punt. So we'll see where we are tomorrow. If we're in this area tomorrow, i.e., we hold it overnight, we're in this 2050 area, I could see minus 10, 15, plus 20, 30, so something like that. So a break and a bid. All right, hope that helps. Good trade, nice evening. Do it again at the next update. See you until then.